Seeking a temporary, quick-fix solution to a long-term problem is rarely ideal. However, when money is tight and traditional methods have failed, payday lenders may seem appealing. Hi, I'm Gail Cunningham. On the surface, getting the cash you need may seem worth it at any cost, but that cost can become financially backbreaking. Let's take a look at how payday loans work so that you can evaluate whether or not utilizing this type of loan is a financially smart decision. They're known as payday loans because you borrow money until your next paycheck. To obtain a payday loan, you write a post-dated check for the amount of the loan plus any fees the lender tacks on. You then receive the amount of money you initially needed to borrow, promising to pay back that amount plus the fees. The term of the typical payday loan is 1 to 2 weeks, at which point the lender cashes your post-dated check. So far, everything sounds reasonable. However, let's take a closer look at those fees. Most payday lenders will charge a certain dollar amount per $100 borrowed. For example, they may charge $15 for every $100 that you borrow. Thus, if you needed $300 for 2 weeks until your next paycheck came in, your post-dated check would be for $345. What's $45 when you desperately need $300? Here's the catch. That $45 represents an annual percentage rate of 390%. You wouldn't dream of paying that kind of interest on a credit card or any other type of loan for that matter. But what happens if you can't repay the loan? The payday loan company may still cash the check, causing you to have non-sufficient fund fees from the bank. Or, and this is the most likely scenario, the lender will offer to extend your loan for an additional fee. As well-meaning as borrowers are, studies have shown that the typical payday borrower rolls over his or her loan more than once. In fact, the Consumers Union estimates that the average payday borrower ends up paying about $500 in interest for a $300 loan and then still owes the principal. I hope I've convinced you to only use payday loans as a last resort and to vow to yourself that you'll do whatever it takes not to roll over the loan. Instead, address the core reason that you need such a loan. Get your finances back on track by contacting an NFCC member agency. Let a trained and certified credit counselor create a realistic budget for you, one that you can truly live with. I'm Gail Cunningham, and that's your Financial Fast Fact.